And we're also learning more about the man behind the Archegos capital management fiasco. Can we call it that? The firm whose demise over the last few days is still being felt across Wall Street. Leslie Picker joins us now with a look at Bill Hwang and his fund's eye-popping leverage levels.
Andrew, I think we can call it a fiasco, especially as you mentioned, we're learning more about what exactly happened and its ripple effects. Bill Hwang flew a little too close to the sun. By taking on an insatiable amount of risk, he grew his Archegos capital management into an investing whale. But when several positions turned against him, it didn't take much to tip his firm into turmoil, causing tens of billions of dollars in forced selling. Now, the risk levels he ran defied logic. I spoke with several hedge fund managers who said they could not fathom that type of tolerance. The Financial Times reported that banks were lending to Archegos at ratios as high as 8-to-1. Citing people familiar with the matter, the FT added that in some trades, ratios were as high as 20-to-1. That means that it would take just a very small move downward in a name to wipe out the whole position. Now, it's also reported that he ran a book that was heavily concentrated as well as illiquid. A spokeswoman for the firm telling CNBC, quote, "This is a challenging time for the family office of Archegos Capital Management. Our partners and employees, all plans are being discussed as Mr. Hwang and the team determine the best path forward." Archegos is a family office, meaning it's not in the business of managing money for outside institutions like pension funds, endowment funds, nonprofits, things like that, as a hedge fund would. That could be partially why Hwang's risk appetite was so high. Andrew.
So what happens next? The fund, how much money do we think he's lost himself? We haven't really calculated that, have we?
Yeah, and there's no way actually to know. There are no real SEC filings to try and kind of piece together information on him and how big the fund really was. There was a Reuters report that said he managed about $10 billion, but that his exposure, including leverage, was something closer to $50 billion. So it's impossible to really know how much of that was his money specifically. Maybe some of it was friends and family, other employees at the fund. So it's really difficult to tell at this point. But it's clear that, especially at this fund's peak, he was just producing tremendous returns, absolutely billionaire status. So it's unclear if he still remains, at those levels or, significantly lower.
Shepard Smith here. Thanks for watching CNBC on YouTube.